Hey guys, Claudio Valdivia here with the Think Real Estate team. I want to welcome everybody to episode 3 of the Investor Deep Dive series. I'm here with my co-host, my amazing team and partner, Erica Osborne. Say hey, everybody, Erica.
Hey, everybody.
Today we are going to be sitting down with Larry Pendleton and Terreon Conyers of Next Level Investments, and we're going to be taking a deep dive into their business. So without further ado, gentlemen, do you want to somebody take the lead and introduce themselves?
Okay, sure. My name's Terreon Conyers. I'm one of the partners in Next Level Investments. I've been in real estate since about 2010, focusing on buying whole multifamilies, and I also flip real estate as well, do some contracting and consulting. So,
cool.
Larry Pendleton, another partner of Next Level Investments, also partner with Terreon with CP Realty, as well as some other business ventures that we do. I've been in real estate since 2014, done flips, done different types of real estate investment opportunities, but primary focus is buying whole rental properties, focusing deeply more into multifamily.
Guys, are you both from this area?
Yep.
Yeah. Both actually from Norfolk, Virginia. Both went to Booker T. Washington. Yeah, we both went to Booker T. Washington High School, and then we actually both went to the College of William and Mary. So we kind of got similar paths. It's crazy.
Now, were those similar paths at the same time? Like, have you guys known each other for that long?
No, I'm the old head, and while I was at William and Mary, Terreon was at Booker T. That's how we really linked up then, just kind of coming back and try and do the mentorship program, and I think he ends up mentoring me more than that. And then
it's supposed to go both ways, you
know? Yeah, definitely. Yeah, that is actually crazy. It's actually kind of how we met. Like I said, I came after Larry, so when Larry went to Booker T, I wasn't there. And then he went over to William and Mary, and not a lot of people go to William and Mary from our school. So I guess he kind of heard word that I was going there. I was playing college football as well, just like he did. And he was leaving William and Mary when I came. So he always used to come back, my entire time there and just do lunch and talk about life and life after sports and things like that. So that's really how we met, and we stayed in touch. It was just one of those things where he was just, reaching back out and mentoring me, just as far as, my progression through college and, being a student athlete. So.
Man, it's awesome to have somebody like that, to pull, not as if he pulled you on up, but I mean, you're following kind of after him 4 years down the line and kind of following that route. That's awesome.
Yeah.
All right. So how did you two then decide to partner up? And we'll get to your real estate journeys and how you came to that, but what made you decide to partner up and think you'd be a good team in the real estate world?
We both actually been doing helping family and friends with their taxes for years. And of course, with my CPA background, and he has a finance economics background. And one day he just kind of came up to me and was like, we can somewhat combine resources here and kind of do more. So we started PC Financials 2013, 2000, somewhere in that realm. And just been kind of cranking at that. We having to adjust the business in that aspect just because of 9-to-5 conflicts and all of that. But we continue to do business together from there, and constantly are brainstorming different ideas. I actually got the real estate bug from him because I kind of peeked what he was doing, and he told me about his story, how he got into it. And then that ended up kind of me, him kind of showing me check out this property in Norfolk, you want to get it, and that's how we end up partnering up in real estate after that.
Yeah. So
his mentor, coming out of high school into college, and then roles reversed during your professional careers. You had your own stuff going on, and then he brought you into the real estate world. So it's neat to see how that kind of goes, a little hand in hand.
Yeah, definitely. And that's what relationships are. This business is solely based on, not solely, but it's significantly based on relationships and how you build with people, and you can't build an empire by yourself. And I started out in real estate, just, by my dad. My dad had ran into some issues and concerns where he was out of the country for a while, for about 2 years. And I had just gotten out of college. I just graduated from college. And he had like one little duplex and like 2 houses, and I was going to pick up these checks. So I was picking these checks up, and I had just purchased my own property, my first home as a homeowner. And I was depositing these checks, and I had learned about paying a mortgage. And I was like, hey, I have a mortgage. It's like, hey, Dad, I'm depositing these checks. Do you need me to pay the mortgages on them? So he ended up telling me that, hey, all the mortgages are paid off. And he was going to be gone for 2 years. And I was like, what? So I'm putting this sum of money that was more than I was making after a 4-year college student into my dad's account every single month while he's away, basically living his life. And that, I always grew up around my dad being a handyman and things like that. But that really changed and shifted my mind once I saw that. That gave me that light bulb to say, hey, look, this is not just some handyman stuff. This is something where you can have residual income that comes in no matter where you are in this world. You can have a source of income coming in. So that's, what gave me the bug. And then once I got the bug, I tried to tell everyone about it. And one of the only people that was listening was that guy that used to come back to William and Mary and eat lunch with me and just talk. And he was like, okay, well, I'll try. And, he got the bug from there as well. And we've been growing together ever since.
It's a catchy bug, that's for sure.
Oh, yeah.
If you can get somebody to listen to you and you're able to explain it in an easy format, it's an easy bug to catch.
You know what's awesome about this industry is that, like, and I'm a little biased, right, because I'm dead in the middle of the industry, but in this industry, I just see so many people that get in, they have their success, and immediately they want to turn around and bring more people into the fold. And they're not looking at them as competition. They're looking at them as a friend that they can build a business with, or somebody that they can pour into and duplicate their success to another person. Where in corporate America, right, everybody's jockeying for position. Everybody wants to get to that next level. And it's really like, when you look at it, when you look at the people that are involved, everybody's a competition. And real estate kind of sets that on its head. And it's like, no, there's plenty of houses. People are always there's an abundant supply of houses. There's always going to be an abundant supply of demand, because people always need somewhere to live. And like, that's amazing. That's an amazing story. Larry, can you
say it with my chest?
Yep. So Terreon, like, you were already exposed to real estate as a young adult, and that kind of led you that way. Larry, you got partnered into it, and it was like, hey, yeah, this makes total sense. Where did the journey actually begin? When we talk about like first deals, what does that look like? What did that look like?
You want to go for Larry, or you want me to go?
I guess the property I was referring to, like, it was a little 3-2 townhome right near off of Military Highway and and the numbers work. What really made the numbers work was that it would have been me using my FHA loan and only paying 4.5% interest on it at the time. Only thing I regret about that is I should have used my FHA on a multifamily on a 4-unit. But let's say lessons learned. But that kind of came to the base for me. Let's say got linked up with an agent who had a Class A contractor that you required to have. Went through those motions with him of getting the renovations done. The renovations took about 3 months. And then from there, hired a property manager. Like I said, a lot of the connections that Terreon had from his previous experiences. I was fortunate and grateful enough to leverage off of. And from there, and until this day, like net cash flowing, even after the mortgage is paying $300 a month from there. So that's kind of how, like I said, it's one thing to get bit by the bug, but then you actually see the fruits of those labor. And like I said, I cashed out 401k to make sure I can cover the down payment. Like once I knew how the numbers worked, like I was fully committed to doing it because I knew it was going to pay out at the end.
That was your first deal as an individual, or
as an individual.
Okay.
Yeah, Terreon had big projects going on and stuff, so like it was small for him. So he passed me some scraps, and it allowed me to get a little bit.
Hey, everybody needs some scraps. So that's how that's how you get started.
Hey, those scraps are producing $300 a month cash flow for how many years now?
Yeah, so it's been 4 years now. 3 years. It's been 3 years with that, and like I said, the money I put in, I've gotten that back. So returns are infinite at this point. Like now, like I'm able to use that money for other projects that we have because, like I said, just constantly reinvesting back into the business one way or another.
$300 a month is pretty significant money, right? Like it's
one door. That's great money. Absolutely. Now, guys, you both have financial backgrounds. Like you said, Larry, CPA, Terreon, you have the financial and economics or finance and economics background. How heavily did that play a part in you guys being comfortable in the real estate realm? And what else have you done to educate yourself and make yourself as informed as you can be, before either making the leap or still doing now? How did you educate yourself to make you feel comfortable about making that leap into real estate?
Well, I can answer that for me in a few ways. So a lot of the things that I've learned in this business was really school of hard knocks. Just jumping in that, like I said, transitioning from that motivation from I saw with my dad and his situation. It propelled me to get my first deal after I purchased my first home. I was so anxious that I put a contract on a property as is because there was a bidding war on it. And I ended up losing $10,000 because I didn't understand how important a termite and moisture inspection was. At minimal is what you want to get. So that was a huge lesson that I learned. But outside of learning lessons just by going through what I went through, just reading Rich Dad Poor Dad, some of the basic books, The Millionaire Next Door, just books on Bigger Pockets was a huge one. When I found Bigger Pockets, it was a whole different world where there were people with 30-40 year real estate experience being landlords and stuff, just having conversations with first year investors and things like that, and you could read through those interactions and dialogue and so many topics. So I just became a subject matter expert on Bigger Pockets and books and networking and getting out and meeting people, if that answers your question on what I learned.
Absolutely. So. Larry?
I mean, from my end, it kind of goes back to you can't get overly emotional with the numbers. I'm a very conservative person when it comes to underwriting deals, sometimes to a fault. And I mean, a lot of people call me out on that at times, but it's because like I said, I have been part of deals. Like my second deal did not go as well as my first deal, and I thought I can kind of take this winning success from one deal and kind of convert it to my first flip, and that wasn't the case at all. So from there, I had to learn let's say like I said, I wasn't reading then and educating myself. Just more okay, this makes sense, but I forgot about factoring like certain closing costs and those details in there, insurance and all those things, where my hand was held quite a bit on the first time around. So just kind of knowing what the numbers are not being so caught up in and eager to get a deal, because there's a lot of opportunities out there. Like there's abundance of opportunities and an abundance of deals. Sometimes it's not the same amount, it's not the same number, but not every opportunity is a deal. And I said, yeah, that School of Hard Knocks definitely taught me some valuable lessons going forward.
I think those are some of the best. It's the best education I've had, is being absolutely knocked on my ass during a project and coming out the other side at the same time, just with the lesson learned, for sure.
Yeah.
All right, guys, tell us about your first deal together.
I think that was 27th Street. So another duplex in Norfolk. That was MLS deal. Our agent was really good. Older couple, they had to move out, and we were the only ones bidding on it. And like I said, we ended up having to, because of the amount of work with the termite moisture report pulled out, like we had to lower our offer. I think, yeah, I'm paraphrasing what the seller's wife told our agent, is that like his our offer sent him to the hospital.
Oh yeah.
So low.
That was crazy.
But they ended up accepting it. And I said, I hope that wasn't the case, but the numbers didn't work, and I'm glad we did, because like I said, just more stuff kind of came up from it. From there, ended up getting it for 70. We ended up putting another roughly 70 into it. Basically everything, like new roof, HVAC, electrical, across the board. It was fully needed. One of those like old 100-year homes converted into a duplex. And had some, our first round of tenants were terrible.
Were you managing it yourself? Did you guys place the tenants in there?
No.
We placed the tenants in there. We wasn't managing it, but we found the tenants. We were like, one of the things, like we were eager to get some money going.
Yeah.
We thought we were helping somebody out, because at the end of the day, you're trying to help people in this. Yeah. So some people needed a place to live at. We didn't get to do the proper due diligence on them, and I guess within a month, we knew we had to kick them out.
Yeah, we paid.
Yeah, that's pretty quick. They let you know right away, right?
We normally do property management, but we were in between property managers, let's say that. So while we were in between, because I handled a lot of the construction part of the business, we were already done, and we had quite a bit of significant amount of money in this property. So I was like, hey, let's go ahead and put a sign out. And this is pretty close to military, kind of, in a growing area. So my phone was just ringing off the hook. So I was like, hey, we can take advantage of this. And I kind of succumbed to a pretty sad story about the living situation. And I made a decision with my heart, and it wasn't about the numbers all, in that case. And
that's tough. That's tough, because it's a tough spot to be in.
Oh, looks like Terreon got muted, or he muted himself. I'll pick up where he left. I mean, from there, like I said, we actually it was my wife that actually found our newest property manager, Jackie Pierce, and like she's really good, really thorough. I said, and I said, you're still building that relationship with someone, because you're talking about 8-10% of those grocery rents going to someone you just met. And like she was able to kind of like earned our trust, we earned her trust, and the quality of the work that Terreon typically does with his renovations. I mean, it's top of the line. So she was able to get the rents where we thought we was going to get them at. Got good tenants in there. After getting the old ones out, which is never an easy hurdle to jump, I should say.
No, they're easy to put in, very hard to get out.
But I'm sorry about that, guys. I don't know how to mute phone calls yet, but I wanted to say about that first deal as well too. I don't think Larry mentioned it.
Turned out to be a fantastic deal for us because even though we had the little hiccup, we paid 70 for it. We put 70 in, and then we ended up getting it appraised for 263. So
Ooh, nice.
yeah, it was a home run for us. It really allowed us to cash out refi and do some other things and go on to actually buy our next deal, which was right around the corner, which was an even better deal as well too. So 2019 was a very good year for us.
Are you guys, what's the bulk of your business? I think I know the answer. Is it mostly buy and holds or mostly flips or half and half? What does that look like?
I would say probably 70-30 buy and hold to flips. And as it again goes back to if the numbers work, I said we can get in, get out of the property. Like we're working on a flip now together. Terreon knows my particular heartburn with flips. I haven't fully recovered from my from my flip
Little
escapade.
PTSD.
Yeah, so that's a whole nother YouTube video unto itself. But I say it makes sense. But the reason why I'm comfortable doing them now because I have a good team around me. I have a great partner with me. Where before I was doing it myself, doing things that's not my strength. Like I said, I'm not good at managing people from a contractor standpoint. I'm good at it from a financial standpoint and office stuff. That's my strong suit. And like I say, I can argue all day with numbers. Like that's just what I do. But once I actually realized that was my strong point, and I can learn to be a better project manager, but that I can go through it by myself slowly, or I can partner with someone who's great at it, and we can accelerate like we did in 2019, as you mentioned.
That's awesome. When you guys are doing the renovations on the buy and holds, you said, Terreon, you're kind of the construction piece of the operation. Are you guys renovating those to flip levels or?
Yeah, we are. Yeah, and kind of to answer your question as well. So, like Larry said, we've done our first flip deal together, but I've been flipping for about 3.5 years now, 4 years now. So that's always been a part of the portfolio for me. But we've done the buy and holds as our main thing. The reason why I flip is to build capital for buy and holds and things of that nature. But all the flips, everything that we do, whether it's a buy and hold or whether I buy and flip it, we do it to the same standards as far as textured walls, paint, trim, granite. We do stainless steel. We do those in A, B, C neighborhoods as well. And we push rents and we, push the expectation as far as how kind of neighborhoods look or where neighborhoods kind of should be going. So we've seen that, last year, in a lot of the projects we've done, once we buy something, people put new constructions in C neighborhoods that weren't there at first, or, people have bought properties next to ours because they've seen kind of some of the things that we've done before. So we definitely kept a high standard as far as the product that we put out and kind of the expectation for when you see things that we do. So
that's awesome because I know, and it's not wrong, but I know that there's a lot of investors that kind of, when it comes to their buy and hold stuff, they'll look at it and they'll say, well, I'm not going to go all out on this because it's not going to be a flip. It's going to be a rental. And there's that opportunity, right?
Yep.
You put a renter in there and they completely trash the place. But you're taking another route and you're saying, what we're going to do is we're going to increase the expectation from our tenants by delivering a product that is like nothing that's on the market currently in this area. And by delivering that to them at a reasonable price, we'll get tenants that care more about the property, even though it's not physically theirs. There'll be an ownership there because of how nice of a product we're delivering to them.
And in addition to that, too, you got to think about, so a lot of properties that we do LVT, luxury vinyl plank. So it's 100% waterproof, scratch resistant, and things of that nature. Typically carpet, bedrooms, things like that. We do
the LVT all the way through because it's wipe and go. You know, you don't have that turnaround, you know, that 2-3 week turnaround when you lose a tenant or something. You can literally wipe the floors down, wipe the baseboard down, and you can keep going, you know, even though it's a higher cost up front initially, but you don't have that reoccurring cost where you have to change the carpet, you know, because someone had a dog or, you know, they had a iron that burned through the carpet and things of that nature. And then when you think about grading as well too, it's pretty much, you know, for mica, you can put a hot pan or something on it and, you know, mess those type of things up. So those things last for a very long time. And those, you know, and that's the intentions, you know, when we go in, we gut them, and we do all new plumbing and electrical. You don't have to hear, hey, I got a leak from a copper pipe that's in there for 50 years. You know, we kind of eliminate those things. We want to go in and fix something so that we don't have a bunch of service calls over 50 properties that we have, because we know the quality of work that we put into it and the products that we put into it, you know, they're meant to last for a lot longer than someone else who continues to turn over and put in a cheaper product. So that's our thought process.
That's awesome. That's good stuff. Hey, I know that we kind of touched on, you know, there's been some bad deals and that those deals have, you know.
Learning lessons, Claudia. There's been some learning lessons.
We've had some learning lessons based off of being gung-ho to get a deal done. Can you deep dive into some of those specifics of the deals? Like
either deals gone wrong, right? Are you talking about something gone wrong? A couple horror stories? Everybody loves a good horror story.
Larry, you want to go, Larry?
Sure, why not? I remember it's clear as day. So there was a lease option deal out in Portsmouth two years ago. It was for about 80,000, and like I said, the goal was to end up flipping this property. So he basically leased the property to me. The wholesaler, I mean, it was a pretty clear deal. The mistake that happened, the numbers worked and the market would have been fine. Like I said, 80 in, probably roughly another like 60 to 70 work needed at that point. And then being able to, at the time, the market was around 190, 200, probably pushing 210 really, to be done. Like if you get into that typical 3-4 month window from that. So like estimated to do a pretty good piece of change in there. Like I said, you got I got family involved and basically full gut, like we tearing down walls, getting permits, all that stuff. So what ends up happening is that the contractor that I had was mainly more of a glorified handyman, and then I had people involved that's supposed to be kind of managing the project from that aspect of it. So I ended up kind of coming in as I guess stuff stopped hitting the fan. I guess we shouldn't curse up here, but that's fine. So as like the time
adds emphasis.
So as our time budget started to kind of collapse on us, and of course, like once you get into the winter, is work can't get done, so forth and so forth. Things are going smoothly, things aren't going as scheduled, and like I said, just I'm taking accountability for not being able to put the team together beforehand in order to tackle the project. I wanted the deal. I knew the numbers worked, and I just had to find the team afterwards because it really wasn't much money up front. So ended up having to, at the end, really bring in passive investors that can kind of get the owner paid off, because we have a time we had a 6-month window with him to get him paid off to cover renovation and then it's time on the market. So literally that deal took exactly 365 days. We ended up buying the deal on the first of October of that year. We did not sell. Ink wasn't on paper to sell it August 31st of the following year. It was a full 365-day deal. The market turned. We ended up the market rate ended up dropping from that 210 mark down to the 180, just enough to get everybody paid off and the investors their interest. I was very, very fortunate not to lose my shirt on that one. I said I ended up walking away with nothing on that, except for the lessons. So I guess I should be grateful that I got the lessons from it. So, but that's basically how that deal worked, from just the number aspect of it, as well as the team aspect of it as well.
You mentioned a lease option. You purchased it via a lease option. Can you explain what a lease option is for somebody that doesn't know what that is?
So basically it's, I guess it's leasing out or rent to own option with the option to buy. So we were he didn't want to owner finance it outright. So we just kind of set up basically, if we were renting out to him, but we had this option to buy it after a certain amount of time. We ended up getting an extension on it from there. That helped a little bit, but like I said, we were pressed with just needing the funds to finish the renovations needed, as well as getting him paid as well. So I say and that was a huge relief from there, because we were paying roughly $1,000 a month for that lease, and having to come back, and that we ended up slashing that in half once we negotiate with the passive investor of, okay, we're taking the lease from him, we're giving you the title, and you're making this much a month off of us holding it. So that was a big release. So that's basically, like I said, that's the kind of simplest way I can describe a lease option is rent to own with the option to buy.
Now that option to buy though, Larry, like in your lease, did you specifically have in there, because you guys are kind of, if you're technically renting it, right, for 6 months with an option to buy, what was in your lease, or how was your lease set up to where he couldn't at the end of that 6 months be like, peace out, nope, I'm not selling it?
Thanks for the repairs.
Yeah, that's actually funny, because we just negotiated that with another similar deal that Terreon kind of found in Portsmouth last week, and we got that kind of contract placed in there. And basically the verbiage we had to make sure back then, as well as I'm doing now, is the seller cannot sell to anyone else, and like the sole person that can buy this is my entity at the time. So like I said, it was I forgot how it was specifically worded in there, but it basically covered us that if it, like at the end of 6 months, like my entity had to purchase that property from that buyer, and any extensions from there, we were still the only sole buyers, like only people that seller can sell that property to. So another thing, like I said, just me being stubborn, I'm pretty sure the wording in it would have got me screwed if real attorneys were involved. But that's just kind of me like accepting that, okay, I should have gotten legal involved in making sure that we were fully tight on that end.
It's a great creative way to get into a property, get a seller the amount that they actually want, because in reality, that lease fee that you're paying is additional. It's on top of the sales price, technically.
Yes.
They can come out of it with a little bit more money than you would be willing to pay for it. All the while, you don't have to take out the financing, on the property in order to make that happen. It's a very creative way to get into a deal. Thanks, guys. I'm gonna put that in my back pocket.
Terreon, is that also your horror story, or did you have another one that you wanted to share?
Horror stories.
I flip a little more than Larry, so I see a little bit more crazy stuff on a day to day. But I'd have to say that probably as of recent, one of the biggest opportunities that I've had was I bought a property in a city that I buy a lot of properties in. But this particular property I purchased probably in, what was it, like January to flip? You know, it's a brick house, like 1,700 square feet. New construction right next to it, right across the street. The house is probably about 4 or 5 years old. So I'm buying it in the middle of winter. Okay. I buy a lot of ugly properties. So probably I'm thinking about $6,000 worth of subfloor damage underneath the house. It would probably cost someone else probably about 15. So the house, literally, you could see underneath the house, with the termite damage, just extreme amount of termite damage. So I got it for a really good price. I saw it as a diamond in the rough. So going to the property, I fix it up. It's beautiful. Turns out to be a beautiful property. So it's probably about February when it starts to get a little hot, and we're doing some work at the house, and all of a sudden, a ton of people it's like at the end of a kind of close to a cul-de-sac. So like I'm like the end house on the cul-de-sac, and like right around the corner on the next street, there's a ton of, let's say, activity that wasn't there when I purchased the house. So basically, the amount of people hanging out on this street next to it that was visible from my property was more than I could have imagined. I lost probably about $15,000 in the sales price. The property went under contract literally 4 times. It was under contract. Every single time I put it back on the market, it was under contract in a day. And when people rolled past and saw all the activity, they weren't too fond of it. But I was definitely pretty upset that I kind of misjudged that. And I thought, like, how could I have, learned from that? Or, maybe should have rolled by it at night, or I don't know. I don't know what I could have done, but that was definitely a horror story. It was a fantastic property. The property appraised well, and I ended up having to discount it for $15,000. So that was pretty terrible. But at the end of the day, I didn't lose. I didn't make as much as I wanted to make, but I didn't lose. And it's a part of real estate. And the reason why I love this game is because it's very hard to lose if you put your numbers together the right way and you put in for buffers and things like that. Things happen. You got to roll with the punches, but it's very hard to lose when you put your team together the right way and you and you factor in those type of things. But I was pretty upset about it.
Well, yeah, because it's like, what could you have done different? Like you said, it's January, everybody's inside, the weather gets a little warmer, everybody cruises outside. How are you supposed to guess that? It's like you have a crystal ball. You're just supposed to figure that stuff out, man.
Yep.
Well, luckily you made it out of that deal. A couple lessons learned. I'm sure you guys have had plenty of lessons learned. All right. So systems. Let's talk about business systems a little bit. How do you guys, without giving away your secret sauce, of course, how do you guys source deals?
I ain't even sure this is a secret. You have agents, you have wholesalers. Like I said, every now and then, people will just hit us up because they know what we do, and like, okay, I know this house around the corner has a bunch of grass just kind of raised up. And then also working with other investors. So if they can't work a deal, then that's the crazy part. Claudio, you mentioned this earlier about real estate, where everyone's willing to share what they have. Like they're trying to bring other people in on deals. So a lot, like I said, according to MLS, it really is hot now as it was last year. But like I said, we used to get a lot of deals, a lot of offers all through that. But now a lot of wholesale deals, and then trying to work with other investors, especially these bigger deals. Where a bigger team is needed to kind of properly manage the asset and renovations that are needed.
Yeah, that's a good segue in actually to what kind of deals you guys are working on now. I know you had the flip thing going on, but my understanding is bigger multifamily is kind of what you guys are looking at. Is that right?
Yeah, like I said, we're still looking into the small rentals as well. Like the current deal, like I say, it's like I say, part of real estate itself is also solving problems. This is the flip that we're working on is a sub-2 deal. The guy got I guess screwed over by his contractor and then got behind on taxes, and he couldn't finish the flip himself. So he was able to come in, meet with the lenders, get an idea of what work is neat, what work is left. There was still some money in escrow. And we was also able to solve a problem for a passive investor who wanted to get into real estate. So they was willing to actually put up whatever additional money that we needed plus some. So now we're kind of just in the middle of, okay, we're going to get this investor paid off. We're going to get these renovations, and then whatever else comes out is what we're going to end up benefiting from. And then if the market completely turns, which is is leading in that direction, we'll see in a few months from now. But we still ran the numbers as if, okay, if we have to hold it as a rental, can we still flow on that? So that's another aspect that I kind of learned, and I believe Terreon as well, is like, okay, just having multiple exit strategies. Okay, if we can't sell it, if we have to hold it, is the market rent still good in that area? Or if the economy turning where there's going to be more renters and we'll be able to still get this rented out, even if we can't sell it. So, and then in regard to the in regards to the multifamily deals, it's more just structuring syndication. Basically, you're basically bringing in, trying to raise capital. So that's a lot of what I'm doing now. A lot of what we're doing. Just kind of calling people reaching out to us. How can I get involved? I got this much money, so forth and so forth. We have an SEC attorney out in Houston that we work with, just to kind of make sure that we're following all the laws and regulations related to that before we just start asking people for money or start putting deals together. So like, yeah, so there's, as you two know, like there's all the apartment deals they're happening. Okay, do the numbers make sense from how much capital is needed to be raised? Can we owner finance the deals? There are sub-2 opportunities. Basically, just trying to find multiple ways to try to negotiate deals with the seller or with the broker. So typically, you got to deal with the broker. So it's getting building relationships with the brokers, figuring out what they got in their pipeline, and then how many times have they already shipped it out to their personal connections before they put it out to the public. So that's how we're somewhat structuring these deals of, okay, and it's part of like how we're building our team. Like, if we're going to bring somebody on, okay, what is their purpose? Like, are they bringing in additional capital, like whether personally or outside? Are they adding something that we don't already have, or that we can improve upon, so that it's a win-win for everybody involved, so forth and so forth.
Hey Larry, here's a layup, okay? Middle of COVID-19. Why would anybody invest with you in real estate versus having their money in the stock market?
Oh man, have they seen the stock market? I say, and Terreon has also been trying to get me in the stock market. Like I say, I don't. That doesn't catch me as much as real estate does, because I mean, the CEO of a company has one bad drug night, and the stock market of that company crashes. And it's like, I had no control over that, like, whatsoever. At least with real estate, whether it's here or in whatever, Hawaii, like, okay, I can go to that property, put my hands on it, and like, okay, like my money is in equity in this building. And like, the real estate would never go away unless we're gonna start living underground in caves again. I'm
There's probably a little bit of time until that happens. You might have a little bit of time.
So, I mean, like I said, there's a lot of opportunities out there where, okay, especially if you're not as risk averse. Like, I mean, stock market is a long-term play. If you're not really going to be in the long haul and you're looking for cash flow, there's ways to cash flow. in the stock market. So I'm not going to shoot it down completely. It's just not as straightforward for me to explain as in real estate. Like, okay, here's what the rents are. If we get it at this price, we get this much work done. You're going to be able to get whatever percent return on your money per year, your annual average return. And then once the market clears, like once 5-10 years from now, when we can possibly refinance, okay, we're able to get you 50, maybe even up to 100% of your money back, and you still keep your equity position in the property. Now you're infinite cash flow. Mm-hmm. So if you're, I say, because for me, real estate, putting your money into real estate is the ultimate cash flow investor play, and that's what we focus on. Like, we focus on cash flowing assets that we can get a reasonable return on, and until, like I said, until someone can explain the real estate part of the market, the stock market piece of it differently, like it's too volatile to actually start creating cash flow off of it, unless you truly know what you're doing. Like, you can be a complete idiot like me and figure out real estate.
Says the guy with a master's in accounting. Complete idiot. Okay.
Gosh, if that's the level of idiot, man.
Yeah, right. But I mean, just to chime in on that, I dabble in the stock market a bit as well too. And it's definitely volatile. But when you talk about why real estate, there's so many reasons, and I think Larry touched on it. There's so many outs, even with our property. You know, I lost that bit of money on it. I could have cashed out refi, and made up for that loss, and then rented it out and made about $350 off of that door, despite it being in that neighborhood or situation. So if you understand real estate, I mean, and this is what I told Larry, the first rental. So there's how many places you can go where you can purchase something, someone else can pay for it, they can pay down your principal balance, and you can make a profit off of it at the same time, and it appreciates. Like, where can you go and have that many wins on one particular item that you're investing in? Yeah. It's a no-brainer for me. You know, where can you, in the stock market, you can't, there's not a ton of outs. It's either it's going up or down, you're either in or out. You know, there's so many angles to this business, and there's so many things that you can do in order to secure your future or secure your family's future, set yourself up for any goals that you particularly have. So that's what makes real estate so attractive to me.
Yep. And for people that are watching this, you know, the basic, what everybody's exposed to in regards to stocks, when you're purchasing a stock, you know, you buy $100 stock, you're paying $100 for it, right? When you're buying real estate, your money goes further. If you want to purchase a $100,000 house and it's an investment property, and you have to put 20% down, you've put $20,000 down, and you're controlling a $100,000 asset, right? So there's a difference in purchasing stocks for, again, the traditional investor that is not, they're not a sophisticated stock investor. You know, the stocks that you're buying through E-Trade or Ameritrade or whatever, like, you're paying full value today for that stock in order to own that stock. It's not the same thing with real estate. So,
and if I can just go ahead and geek out for a little bit, we ain't even talking about the tax advantages of real estate versus the stock market. So I can go on a little tangent right there. But as you mentioned, like, you can put 20% down, control 100% of the asset, and then get 100% of the tax benefits from it. Like, you can literally almost, like, everything that we bought in 2019, like we're going to be able to basically pay no taxes on any revenue that we made on those properties in 2019, because the tax law is
with some people.
Oh, well, I don't want to offend anybody. So. But that's how the tax law is written. And it's like, if you're doing it properly, you got it properly documented, like, you're able to, like, okay, we have $1 million in assets bought in 1 year. We made this much money on it. the depreciation on those properties is going to wipe out their income. And
Not that we particularly have that.
It's just an example, of course.
That's just an example.
Bottom line, you want a CPA and some finance guys on your team.
Absolutely.
Figure that stuff out for you, for sure.
Absolutely. It's all about the team.
It is. It is. What does the future look like for you guys, for your team together?
I think it's going to continue to help and educate people on real estate and financial literacy through real estate and tax consulting as well. Like we got a few people that reach out to us and just kind of help building that rapport there, using that as an opportunity to be connected to more passive capital so that we can get into these larger deals. Like I said, a few in our pipeline that we're having to follow up on. Where that can we get into a 50 unit portfolio or a 100 unit deal that we're looking at, and then who is going to be our financing? Because we're also looking into does everything have to go through a bank? And the answer to the question is no. If you have the right lenders in place, hedge funds and whatnot, so. It's really more getting more into that where it's not so much traditional, going through a bank and going through agents. I mean, the only thing that's traditional is the insurance piece and the actual legal side of things. So we're just trying to expand our horizons on different type of deals, especially in the larger realm. We can scale bigger.
When you guys off top, when you guys started the CPA business, did you have the foresight to say, hey, this business is going to intrinsically feed into this business, or was that did that happen after the fact? So,
I'd say it was mutually exclusive. I think we did one with the CPA thing, and then we did the tax thing, and then the real estate thing kind of came along as a hey, I'm seeing this. And then as we kind of got into both, they kind of met. And we're like, whoa, hold on, and Larry helped us, having his master's in accounting, saying, hey, look, man, I know we both bought these, rentals, but did you know that, we could do this, with our taxes because we, have these, and then, another light bulb clicked off. It was kind of like divine purpose, we did one, we did the other, and they kind of on the same roads or parallel roads, and they eventually met, and it's been great. It's been great to have two businesses that can work with one another and to benefit what we have going on collectively. So.
Yeah, I mean, you guys get to reap the benefits of that knowledge. And I mean, you're so involved in the investor crowd that those people as well. I mean, that's a whole client base that you can help them just as easily as you guys are helping yourself in your own investment. So. Yep.
And we are. Yeah, we meet a lot of investors, new and experienced investors who, they educate us and we educate them. And, it's an exchange of information and knowledge and resources. And support, and that's what we aim to do, to kind of show people our path. And we're still on the path, but show them how to get on the path and get to where they want to go, and how to make sure that they are using their resources and their finances the correct way. So,
well, guys, how do people find you and find out more about that aspect of your business as well, along with, of course, your multifamily ventures and syndication? With your, is it PC? Is it right? PC?
Yeah.
PC. Okay, how does everybody find you if they want to find out more about what you guys got going on, whether that's investing or whether that's through the financial and tax consulting?
They can check out our website, nextlevelinvestmentsva.com. They can email us. You got Larry at Next Level Investments VA, as well as Terreon at Next Level Investments VA as well. Like I said, we're happy to talk to anyone.
Facebook, Bigger Pockets?
Working on that. We want Bigger Pockets.
Larry, what?
Yeah, we have a Facebook
on
for,
business page.
yeah, we have a Facebook for our tax business as well, KC Financial Services. And I'm definitely on Bigger Pockets as well, Terreon Conyers. I'm sure my name will be spelled in the bottom of the YouTube, so you can find me that way as well.
All right, guys. First, one piece of advice, or I have two more things. One piece of advice you give your newbie investor self, your little baby Larry and Terreon selves. One piece of advice.
My piece of advice: use your FHA multifamily first.
All right.
Use that. Do not use it to put 3.5% down on a home. Buy you the biggest multifamily you can afford at the best price you can with the best returns. It will set your future up tremendously. Definitely. I've given that advice to some people. I've seen them use that advice, and I've seen them, go into 2 and 3 deals in the time that it takes the average person to do 1 or 2 deals. So I've seen people really accelerate their success, really accelerate some of their goals that they're trying to achieve by just taking that small piece of advice. Even if you have a home now, don't be discouraged as far as using an FHA. But if you can move, or if you have access to an FHA where you can put down 3.5%, please don't waste it on a single family. Get you a multifamily first, and then work on the rest after.
Probably goes same for people who have a VA loan at their.
Absolutely. Yep. Absolutely. Those.
Awesome.
Great information.
Larry?
I guess in the realm of that, I guess just more just having to change your mindset of, a lot of people who are just now getting to this, yes, everybody wants to make a lot of money. That's great. But for me, especially this year, just having that mindset of just positivity and abundance, and then figuring out what's your why, why are you getting into real estate? What's your overall goal? Because if it's only about money, it's not fast money at all. The reason why it's better than the reason why I won't say better, but the reason why it's so different than the stock market, it's not these huge peaks and valleys. It's slow money along the way. So if you don't have the mindset for it, and you have to see it as, okay, you have to have a bigger goal in place, a bigger why of you're doing this, and then constantly building upon that, and that requires just educating yourself of the game, getting yourself around people that's actually doing real estate, not just talking to people who, a lot of people talk negative about it, but they're not investors. And also get connected with people who've been through the 08 crash. I haven't gone through that, but I'm learning from a lot of people who have gone through that, and they are locked and ready to go for this. And they're not worried about this at all. They're looking forward to these next few months of this proverbial crash that's coming. And it's if you get yourself around the right people, that's going to help your mindset, remove the negativity, the negative people as much as you can. And then just kind of build your education, your knowledge from there. And you'll learn about the FHA and how to get that's going to feed into what's a good return, what you should be looking for if you're buying at the right price, so forth and so forth.
Awesome. All right, last piece, guys. A book or a podcast or a YouTube channel, something that a little nugget to where you say, read this, it'll change something. That doesn't mean it has to be good or bad, but read this, it'll change something. Listen to this, it'll change something. Anything that you guys stand by.
Just one?
Just one, or many.
I think the typical answer is the Rich Dad Poor Dad, and it's a great answer. I hands down, I try to make it the goal to read that at least twice a year. But from that, like I said, you can't just stop there. The cash flow quadrant is his second book is or the continuation of Rich Dad Poor Dad. another one to kind of help figure out, okay, like how does money flow, like the different mindsets of individuals, whether you're an employee, self-employed, big business owner, or investor, and why we need to be more on the investor, business owner side of things. So if I had to pick one, I'll have to say cash flow quadrant if I don't want to default to Rich Dad Poor Dad.
If I'd had to pick two books, I'd have to say Shoe Dog by Phil Knight. It's a very, very good motivational book.
Can you say that title again, Terreon?
Shoe Dog by Phil Knight, the creator of Nike.
Okay.
Very good book. Very good book that'll definitely light a fire underneath you for those people that need that extra kick. And then The Millionaire Next Door. That's a really good book. That's Thomas Stanley. So those two books are definitely books for the mindset for you to get over that analysis paralysis stage that a lot of people are get into.
It can happen, especially if you have a numbers background.
Yeah.
Coming from a numbers background gal, it took me a lot to get out of analysis paralysis, and I even still sometimes hang out there.
Yeah.
Just get down in the weeds. So awesome, guys. Well, we really appreciated having a chat with you guys and having you here, and we're loving interviewing local investors and putting it out there so people can connect with you guys here in the local market. Claudio, you want to bring us out?
Good thing. Larry Terreon, thank you so much for joining us today. Appreciate all the knowledge that you guys shared. Guys, we are the Think Real Estate team. If you'd like to be a part and interviewed during one of these investor deep dives, send us an email at info@thinkreteam.com. We appreciate you guys tuning in today. Hope you enjoyed and took away a lot of content. We'll talk to you guys on the next one. Thank you. Have a great day.
Thank you for having us.
Thank you.
Appreciate it.
Appreciate it.
Bye, guys.